All right. Today is Thursday, March 23rd. This is a recap for the stock market activities today. Folks, I got a good one for you tonight. Let's begin with this. Today, a lot of events took place, a lot of important events. And let's start by Janet Yellen and the cleanup job that she did today in front of the House. All of a sudden now Janet Yellen comes out and says, we're going to protect all depositors if warranted.
Deposit protection is provided by the Deposit Insurance Fund, which is funded by fees on insured banks. As I've said, we have used important tools to act quickly to prevent contagion, and they are tools we could use again. The strong actions we have taken ensure that Americans' deposits are safe. Certainly, we would be prepared to take additional actions if warranted.
You mean to tell me that we have banks blowing up, people doing bank runs right now? Stocks of these smaller banks are crashing. The credit swaps are skyrocketing, indicating that a lot of these banks will indeed blow up. We look at the Fed balance sheet increasing by $90 billion.
Oh my God!
On top of the $300 billion added last week alone. And you telling me that this does not warrant protecting all depositors? What are you waiting for, Janet Yellen? For the whole system to collapse? And then come out and says, we're going to protect everybody now. And by the way, Janet Yellen is a mess. I don't need to tell you that. You already know that. But oh boy, yesterday, Senator Kennedy from Louisiana absolutely massacred Janet Yellen. You gotta watch the whole thing. But I'm just going to give you some highlights here. Take a look.
Thank you.
Madam Secretary, isn't it a fact that the President's proposed budget for next fiscal year is $500 billion more than this fiscal year?
On the spending side?
Yes. That's what a budget is.
Yeah. It is about $400 billion.
Wow, the Treasury Secretary doesn't know what a budget is.
But wait! There's more!
In January of 2019, the Federal Reserve issued a warning to Silicon Valley Bank over its risk management systems.
I have no idea. I'm not responsible in any way.
But you're in charge of the banking bailouts and the crisis, right?
I am not involved in banking supervision, and I don't have access to any information about the supervision of Silicon Valley Bank.
Okay, so you don't know whether or not the Fed, you haven't looked to see whether or not the Fed issued a warning, 4 years ago, to the bank over its risk management systems?
That's not public information, and it's not
Sure it is.
information.
It's in the Wall Street Journal.
Well, it may be in the Wall Street Journal, but it's not public information, and it's not information that I have access to.
Well, I'll give you a copy of this article.
I read the article, but
The Fed issued a matter requiring attention, and it said your risk management practices are terrible, and you need to improve them.
that is what the article says.
Oh my God. Janet Yellen, seconds ago you said you didn't see these numbers, you didn't read the article. And now she admits that she did. Unbelievable. And it gets better, folks. Just go watch it for yourself. What else happened today? You know, in the morning I was having a big cup of coffee and I was reading the recent report by short seller Hindenburg. And this time around, it's against Square, aka Block. Now, this could not come at a better timing, folks. Number one, we talked about Mama Cathie Wood dumping Coinbase right before the SEC announcement, and she left a lot of her followers holding a massive bag. Insider trader, perhaps. But of course, genius Cathie Wood, she took the money and she bought Square, aka Block. And the very next day, Hindenburg announces the short selling report against Square, aka Block, and the stock goes down by more than 15%. Now Cathie Wood got smacked really hard. And I say this is karma, isn't it? But the beauty of this Hindenburg report is, we talk about Cathie Wood and insider trading. By the way, Coinbase executives, insiders, dumped over $7 million worth of shares in the last 30 days alone in anticipation of this report coming out. But we all know the genius Gary Gensler of the SEC remains in a coma. And the SEC by design, by the way, remains in a coma as an organization. That's done by by design to keep Wall Street as a jungle where they can rob the mom and pop investors over and over and over again and become rich. That's the whole point of having the SEC, is to give the public the illusion of having a cop. The problem is the cop this time around is on the take from Wall Street. They work on behalf of Wall Street, not against them, not to check them out. And therefore, we need short sellers, like Hindenburg, for example, to do the research, to do the job that the SEC refuses to do, and catch all of this filth, all of this fraud and manipulation that's going on in the stock market right now. We know back in 21, during the meme stock mania and the Great War against short sellers, which, by the way, the shorts won decisively. I mean, remember the man, King Griffin? That guy shattered the record on Wall Street, making the highest profit ever, over $30 billion in a single year. Thank you to the monkeys, of course, and their stupidity. But that aside, in 21, there was a lot of demonization against the shorts. The shorts are the bad actors here. They do naked shorting. They bid against companies. They want certain companies to go down to zero. They profiteer from the pain of others, yada, yada, yada. Same crap, by the way, the CEO of Lehman Brothers said when he was attacking the shorts in 2008, not taking any accountability of his misdeed, of his fraud, of his irresponsible risk-taking. No, just blame it all on the shorts.
If we get this right today, hope it will squeeze some of those shorts. And squeeze them hard. Not that I want to hurt them. Don't get that, please, because that's just not who I am. I am soft, I'm lovable. But what I really want to do is I want to reach in, rip out their heart, and eat it before they die.
The 62-year-old Wall Street tycoon raked in nearly $500 million between 2000 and 2007, according to the Oversight Committee. 1 year alone, earning more than $106 million. Along with all that money came immense homes. This estate in Greenwich, Connecticut, complete with tennis courts and swimming pool, and a $21 million apartment on Park Avenue in New York City, and a vacation spread in Juniper Island, Florida, with a postcard-perfect view. Not to mention a lavish art collection reportedly worth millions.
And unfortunately, we have this culture staying with us right now. I mean, you might have seen the tweet by David Sachs. I think he has some good takes, but this is perhaps one of his dumbest. And he says, oh, the bank runs and the collapse of Silicon Valley Bank, that's not the responsibility of the bank itself. That's not the responsibility of regulators who missed out on fraud and excessive risk-taking, not having a risk or compliance officer for months. That's not the problem. The problem is the short sellers. Those are the ones who are causing the bank runs. Oh, really? What a stupid take. The banks, in this case Silicon Valley Bank, committed fraud and manipulation. They've been giving loans to themselves at the highest record ever right before the collapse. They knew that their bank is going to collapse. They juiced up bonuses, they sold stock, they gave loans to themselves. But that's not the problem, right? It's all the shorts. The evil shorts were actually looking out for you guys. If you recall back in 21, when shorts like me, for example, said, hey, all of these valuations, that's fraud. That's unsustainable. That's a Ponzi scheme. All of these stocks, the stay-at-home crap, the Mama Kathy bullshit, all of these valuations are not going to hold. It's impossible for them to hold. We were called perma bears, spreading FUD, you're a boomer, bro, yada, yada, yada. And then what do you know? The executives, the pumpers who've been saying, hey, mom and pops, come over here. Here's a banana for you. This is going to be the future, bro, the new banana. Come over here. The stay-at-home is going to stay with us forever, says Zoom. Peloton is revolutionizing home gym equipment. Nobody's going to go to a gym anymore. Carvana, a vending machine for cars. What a genius idea. That's the future, bro. And you guys kept buying and paying, chasing the hype, chasing the dream. And the executives did dump exactly at the top. They became filthy rich and they left you holding the bag. And who warned you about all of this? Yep, the shorts, like Hindenburg, for example.
It was a record year for stock sales by corporate insiders. CEOs, executives, and board members sold over $170 billion of their corporate stock last year. That's according to data from Smart Insider. The sales were up 80% over 2020 and more than 2.5 times their pre-pandemic levels. So let's look at the top 5. Elon Musk was, as we know, the largest seller with over $16 billion. Jeff Bezos in second place at $10 billion. The Walton family selling nearly $8 billion of Walmart stock. Mark Zuckerberg cashing out $4.5 billion of shares in Meta. That was 8 times his 2020 sales.
And I love the reports by Hindenburg because A, they do a great job. They do financial forensics. In the reports, they track all the numbers. They do the jobs that the SEC and regulators should be doing right now. But unlike other shorts, I really admire Hindenburg because they don't mince words. They go after these fraudsters and they attack them personally. In this case, they shredded Jack Dorsey to little pieces with all of his bullshit act about, oh, I'm just a hippie, tech entrepreneur. I want everybody to be happy, right? The guy goes to India, comes back and pretends to be Hare Krishna. Then he hides in a cave and he grows a beard and becomes Jack Bin Laden. All of that bullshit, Hindenburg went after him viciously, and I love it. And what's really scary about these tech entrepreneurs, the Silicon Valley bros, see, unlike Wall Street, the Wall Streeters, we know they're corrupt criminals, but all what they want is money, blow, and hookers. That's all. The Silicon Valley bros, they don't want any of that. Sure, they want money. That comes with the territory. But they're not interested in blow and hookers. They get gratification from, and I would say it's actually sexual gratification, from all of this change the world talk. They want to change the world. They want to protect the climate. They want to save humanity by destroying it. And that's really terrifying. Now, the next story today was the whole TikTok circus in DC. And of course, they get the CEO of TikTok. He shows up to the Congress. And the hearing becomes not about TikTok or protecting teens or the privacy of Americans or any of that. It becomes a circus, a chauvinism circus of, no. You're not as tough against China as me. I'm the toughest. I'll kill China. No. You're not. You're not as tough as me when it comes to China. I hate China. And it goes back and forth with this anti-China crap. When we all know that the CIA, the NSA, the whole intelligence apparatus up Uranus, they're spying on everybody, including us, American citizens. When you download all of these apps, you really think that the intelligence service is not tracking you via these apps? They're not infiltrating your phones and spying on everything? Think again, buddy. I mean, when I look at my phone, I'm already assuming that I have CIA, NSA, Mossad, MI6, Chinese intelligence, everybody. It's the whole deep state party over there. So I'm not going to put anything in my phone that I don't want them to see. That should be a rule. And by the way, the US government bugged Cisco and Oracle equipment that we sold to governments, not Chinese government, but governments of allied countries like Germany. Remember that one? Where the Germans found out they were bugging all of the Cisco equipment that we sold them and we've been spying on them. And then Obama had to fly over there and do a cleanup job. Yeah, we're spying on you, but it's for your own good. Come on. And frankly, folks, I don't care if the CCP is spying on me. I don't care. If they want my dick pics, I'll volunteer. I'll send them to you. I'll autograph some of them too. I don't really care. And this TikTok CEO, he comes from Singapore. And unfortunately, TikTok needs a new PR department because this guy comes to Congress with all of his papers and notes. He did the homework. He thought that if he studies, if he has good answers, comes out polished, try to clean up the accent a little bit so it can sound a little bit American, right? Maybe that's going to work out. Maybe he's going to have all of the good answers and people are going to believe him. Nope, didn't work out. And I say a better PR strategy, TikTok, if you're listening. And by the way, I'll take your CCP money. I'll give you a discount. But you don't understand American culture. You should have coached the CEO to come out to Congress and say, what is this all about? What is this hearing all about? Oh, you guys are attacking an Asian man? What are you, anti-Asian, bro? You got some discrimination stuff going on? What is your constituency, by the way? Congressman from San Francisco. Yep. 70% Asian American. Would you like to lose that? What, do you hate Chinese people, bro? And all of a sudden, all of these woke politicians will go, no. We have no problem with TikTok anymore. Thank you so much. Better yet, he should have actually walked to Congress today with a big fat checkbook and just handed every politician a check. Here you go, sir. Here you go, ma'am. That's what you people looking for anyways, right? Because you're taking checks from Meta, you're taking checks from Google, from Apple. All of this circus that we saw today is because politicians are mad they're not getting a check from TikTok. If I was the CEO of TikTok, that's what I would have said. Ladies and gentlemen, my time, your time is valuable. Let's cut to the chase. Here's the checkbook. How much? How much do you want? I'll just write the check right here. But when it comes to the market, folks, and the impact of this TikTok ban, we've been milking this TikTok ban optimism for months now. Buying Snapchat, buying Meta, buying Google shares. And you know what that's going to do? It's going to open shorting opportunities, baby. And the reason is, what are they going to do? Let's say they ban TikTok. You think people are going to migrate to Instagram? You know, with the old people and and all of that? Because all of these teenagers at TikTok, 16 years old, you're not going to convince them to move to Instagram. Instagram is for old people. It's over. It's done. It's the retirement community. It's where you go to die as an influencer. But here's the thing. Let's say Meta continues to rise higher. We're going to get the next report soon. And all of this layoff optimism, TikTok optimism, guess what's going to happen? The valuation and the expectations for Meta sky high. And when they finally show us the next earnings report, you're going to find out that the revenues are actually going down. Their expenses not improving by much. You know why? Sure, they got rid of all of these employees, but they're going to pay severance. Cost them even more. And the margins will be absolutely abysmal. And by the time we see the impact of the layoffs, revenue growth will go down so much, it wouldn't matter anymore. And since we're talking about Meta, let's talk about the tape, because today we still have the resumption of the recession theme. Forget about the side showing the NASDAQ and Nvidia and AMD or Netflix, all of these names. Forget about all of that. Bitcoin. Concentrate on what the most reliable indicators are saying right now. What is gold doing? Moving higher. What is oil doing? These are bigger markets than the stock market. Commodities, bonds. What is oil doing? Moving down. What is the dollar doing? Moving down. What are bond yields doing? Moving down. All indicating that we are indeed in a recession theme. So with that understanding out of the way, we wake up in the morning and we see a big bounce in the futures. And of course, the geniuses on CNBC and the like say, oh, the commentary by Yellen was misinterpreted. That was the reason for the sell-off, yada, yada, yada. I say it was Jerome Powell as much as Janet Yellen. The sell-off was warranted. Maybe it was a little excessive at the end right there yesterday, and we did some technical fixing in the morning today. What's really interesting is I was actually active in the chat room and Discord today, and I encourage everybody to participate. You might think that your input is not valuable, but it is, because if it's not serving you, it is serving others as a sentiment indicator. And there's absolutely no problem with sharing that at all. Nobody's going to make fun of you. You're part of the same community, you fools. Stop fighting. Bulls, bears, you're all serving each other. But the sentiment was, among the bulls, hey, look, we came back. The bears are just talking crap and smack. They have no idea what's going on. Jerome is going to cut. The valuations are good, inflation going, whatever theory they want to float. Tesla to the moon, Nvidia to the whatever sun, Venus, Uranus, it doesn't matter. And then the bears, what is the sentiment in the morning among bears? Maverick, it doesn't matter what the Fed does, doesn't matter what the fundamentals say, doesn't matter what the logic say. This market is irrational, and the bulls have total control of it. It's going to go higher. This doesn't make sense at all. We're not going to crash. I'm like, okay, good. So the sentiment right off the gate is telling you how things are going to go. Then I look at the RSIs right off the gate, and I shared this with you guys. You look at the 30 minutes, the hourly charts. Despite the bounce, the RSIs across the board were negative, a negative divergence, indicating weakness in the bounce. No volume, and you always have to be suspect of such bounces. So then we talk about, look, my leading indicator is Tesla, because Tesla bounced higher, but it failed to get to 200 again. It reversed before even attempting to crack at 200. That's a bad sign. Then I said, look, watch for 194.55. That's Tesla support, really good support. If that's broken, then we're going to see cascading across the board. That would be my signal to short the Qs, for example, maybe a day trade, doesn't matter. But Tesla 194.55 is an important indicator. And guess what happened? The moment we cracked below Tesla 194.55, the Qs went down, SPY melted down, IWM did the same. So this was an important indicator. And the other important indicator is the NASDAQ, the triple Qs 313, aka Mrs. 313. And of course, we make fun of Mrs. 313. We always use the memes by Aubrey Plaza because she has the best resting bitch face. And she gets hotter by age. Am I right, gents? It's a gift that not a lot of people have. I wish I did, but anyways. The triple Qs 313 is one of those numbers that live in infamy because they have a powerful impact on these charts. Back during the bull run, for example, in 21, especially in the first quarter all the way to the second quarter, 313 was a force of gravity and it refused to let go of the Qs. You want to go higher? Spend a little time with me. You're not going to leave me and blast higher without paying the respect that I deserve, without spending a lot of time retesting. And then you have the permission to go higher. Every rally in the Qs at the time, failed, and 313 acted like a magnet, pulling the chart down over and over and over and over again. As if 313 is saying, you gotta show me something here. You gotta show me another piece of evidence that says, okay, you have my permission to rally above 313. It's an important pivotal point in the chart. And of course, when we saw more earnings from the Qs, from technology companies, we got the permission to rally above 313. Now we have the other dilemma, where 313 is acting as stiff resistance. The Qs got hit really hard from 313 last month, and now we're at the same point right here. The question becomes, will the Q fails and reverse from this point on? And if it does, I think the chart is attempting to form the Maverick of Wall Street logo. So if it does happen, we will dub this as the Maverick reversal. I think I deserve it. But anyways, what would it take for the Qs to rally above 313 besides the dumb argument of, oh, the Fed is going to cut rates, even though the Fed came out yesterday, said we're not going to cut rates. Oh, but bond yields are moving down, Maverick. Yeah, they're moving down for the wrong reasons. What else you got? This is not what I'm saying. That's what Mrs. 313 is saying. Give me something more. Give me an earnings upgrade. Give me something. Because if the Qs has the audacity to rally above 313 without providing evidence, you know what's going to happen? The curse of 313. It's going to pull the chart down over and over and over again. And once it's done beating the chart of the Qs, it will crash it significantly. And that will be the beginning of the crash. So right now, we look around and we say, okay, can the Qs just rally because people are putting money in Apple and Google or Microsoft? The rush to safety, quote unquote. But the rest of the Qs not participating? Biotech not participating? The breadth is absolutely awful. Does it really merit a move above 313? The answer is absolutely not. And of course, folks would say, but Maverick, the Qs has been outperforming. This is a good sign. Maybe we should stick with the technology trade for now. Need I remind you that the last time the Nasdaq outperformed the S&P 500 to this magnitude was just before the crash in 2008. And of course, the viewer says, well, which period? How long? The answer is from surprise, March 2008 all the way till the summer of 2008. The Qs outperformed the SPY significantly, and that came after the Fed moved interest rate cuts from 50 basis points back to 75. There was a lot of optimism back then that, the Fed is easing, the Fed is being accommodative again. Maybe that's good. Maybe that's going to save us. We don't have to be concerned about what's going on with the mortgage-backed securities and the weakness in these small lenders, or even the implosion of Bear Stearns, for example. The Fed is going to fix it all. And then Lehman blew up, and then Washington Mutual blew up, and the Fed did not rescue anything. Everything crashed. But the question becomes, okay, we get all of that. But can we follow the technology trade all the way till the summer, for example? Can we rally all the way till the summer in the Qs? Because look at the chart you're showing us. It appears that back in 08, the Nasdaq rallied all the way from March till June and outperformed. The outperformance continued all the way till the summer. The answer is the difference between 08 and now when it comes to trading is the moves are more volatile. And this happens to many reasons. The proliferation of options, for example, the accessibility to trading. Back in the day, you had to have Scott Trade. And I used to actually put trades by calling the broker. I would call the broker and say, hey, buy this and that, short this and that. So the moves took a long time to materialize. But now we don't have this problem anymore. Things happen faster. Can we rally all the way till the end of the month? Sure. All the way till April? Maybe. All the way till May? But how long do you want to stretch this? You know the valuations are absurd. And while maybe we don't have the problem right now of interest rates moving higher, but we have the other problem, which is recession. Sooner or later, that's going to show up in corporate earnings. Number one. Number two, yields, believe it or not, they're still going to stick at higher levels because of the inflation problems. Not as high as we anticipated earlier, but high enough. High enough to do what? To blow up corporate balance sheets, which is, by the way, bloated with debt for years and years and years. Anyhow, folks, we're going to talk about this and a lot more in tonight's coverage for the stock market. But before we move on, I know a lot of viewers of the channel follow us because of the macro and geopolitics coverage, and you're disappointed this week because we've been talking about technicals and mechanics and market movements. But I promise you, we're going to do a lot of videos coming up on macro topics and geopolitics, the impact on the stock market and the economy. But until then, let's move on to cover the stock market information today. We begin with the closing of the indices, and here we go. All in all, the market was up and down, up and down, up and down. It had managed to close positive. barely for the Dow Industrial Average, which closed in the green by 75.14 points, or a gain of 0.23%. The Nasdaq also in the green by 117.44 points, leading the gains with about 1%. The S&P closing positive by 11.75 points, or a gain of 0.30%. We'll look at the sectors, leading the pack at number 1, capturing the gold medal, communication services. And at number 2 for the silver, technology. Number 3 for the bronze, cyclicals. The laggards, energy, utilities, and financials. So what is the theme today? Expansionary. Risk on. No love for utilities today, which is not recessionary, although the commodities market, the bond market are saying a recession theme today. Certainly not inflationary, with energy being at the bottom, which also supports that certain corners are saying it is a recession theme, while others continue to be in the delusion that this is an expansionary theme. The battle will be resolved. We thought that the Fed will resolve the battle between, hey, is it an expansion, early cycle, or late cycle, meaning a recession? I guess we'll leave that to the macro data to settle the argument. In the meantime, we'll look at the breadth of the market. NYSE 35% advancing versus 63% declining. The Nasdaq 44% advancing versus 53% declining. We'll look at commodities. The dollar flattish for the day, but look at oil, down big. That's recessionary. Gas, heating oil, all down. Grains for the most part are down. Softs, for the most part, are down. On the other hand, what is shining today? The answer is gold, silver. That's recessionary. Although copper rallying higher, that's kind of expansionary. Yet it could be due to reasons of supply and demand, and the reason is we have a lot of shortages in copper supplies, be it from Peru, from Indonesia, and many other producers. The Japanese yen is rallying higher, yet confirming that this is indeed a recession theme. So we have the conflict once again. Stock market says expansionary for the most part. The commodities and the bond market, even the currency market, say it is recessionary. When we look at the options market, the big casino, the volume was slightly higher, and it is split pretty much 50-50 between calls and puts, so the market doesn't have any consensus right now. Be it at that, the number 1, the hottest stable by far, is Tesla, the souffle, with around 2.3 million contracts traded today. Look at this, about 58% of those were calls. So we got the pump in the morning, did not work out. They need more and more and more volumes. This is what happens when the gamma squeeze is dead. And sure enough, it's going to happen soon for Nvidia, which is right now rallying higher with about 1 million contracts traded today. Yet again, puts outweighing calls by about 53%. Apple at number 3 with around 1 million contracts traded today, splitting the puts versus the calls around the 50-50 line. When it comes to the unusual activities that took place in the options market today, we got plenty for you. How about we start with the ticker SLG for Silver Green Realty. Now, it's actually not Silver Green, it's SL Green. Now, I'm going to make a video perhaps by tomorrow about the risk of commercial real estate. The poster boy of commercial real estate is this company. It has been crashing. The odds say it's going to blow up. This will be the next domino. So we talked about regional banks. Next thing comes commercial real estate. The problem is, if you want to short it right now, it's kind of too late. The shorts already piled in. They made a lot of money. And now it's really, really expensive to short the name. But you can use puts, as this trade is doing right here. They bought the $15 puts for the expiration date, May 19th, with expectations that the name will go down and lose more than 25% of its value by the expiration date. They paid around $2 a piece to enter this trade, all in all spending around $3.5 million. And then we have the trade for the ticker QCOM, Qualcomm. This is a big one, folks. Somebody bought the 100 puts for the expiration date, May 19th, with expectations that the name will go down and crash by more than 20% by then. They paid around $1.30 a piece to enter this trade, all in all spending around $1.7 million. And then what about the trade for the ticker WFC Wells Fargo? Will it be the next one to blow up? We'll see. Somebody bought the 34 puts for the expiration date, April 21st, with expectations that the name will go down and lose more than 7% of its value by then. And they paid around $1 a piece to enter this trade, all in all spending around $1 million. And then we have the trade for the ticker GOOS. And I believe that this is for Canada Goose. Might be wrong. I'm going to check it out. out right now. We're doing it live, folks. Yep, it is Canada Goose. The name is kind of ratting after hours. Maybe there's something about earnings. Who knows? But this one is against the name, actually. Somebody bought the $17 puts for the expiration date, May 19th, with expectations that the name will go down and lose more than 6% of its value by then. They paid around $1 a piece to enter this trade, all in all spending around $1.2 million. And then what about the trade for the ticker OZK? This is the Bank of the Ozark, and by the way, in this program, we spotted the unusual trade that predicted the collapse of regional banks and OZK. Now, this bank is very, very exposed to commercial real estate, so we have a lot of bets that it will be the next domino to fall in terms of regional banks. We know First Republic is the next to go, and then perhaps PacWest, maybe Ozark, one of the two, maybe both. We'll see. Somebody bought puts here, doubling down by buying the 25 puts for the expiration date, May 19th, with expectations that the name will go down and lose more than 25% of its value by then. They paid around $2.50 a piece to enter this trade, all in all spending around $2.5 million. Last but not least, what about the triple Qs, the NASDAQ? Here's another big one. Somebody bought the 282, this time around puts, all for the expiration date, May 19th, with expectations that the Qs will go down and lose more than 9% of its value by then. They paid around $4 a piece to enter this trade, all in all spending around $2 million. On to the heat map. What do we see here? Let's look at sector by sector and see what's going on. Financials down. What does that say? Recession. Healthcare, kind of mixed. We look at big pharma for the most part. That's positive. That also tends to rally under a recession. Biotech is up, but that's due to Regeneron, another name in the long portfolio of the Maverick Wall Street, rallying today. But healthcare could be rallying for other reasons too. Big pharma. We're not going to read too much into it. Industrials muted. Utilities down. That's not recessionary. And then we got metals down for the most part, but gold is shining. That's recessionary. Energy down. That's also recessionary. When it comes to consumer defensives, they're down for the most part, but we have some names lining up in the green, be it Kroger and of course another name in the Maverick of Wall Street portfolio, GIS, General Mills. I've been saying, folks, if you happen to be an investor, stop chasing the mania in tech. You can trade it, but you can't really own it. They're all going to go down. But look at the dips in names like GIS. This is a solid name. It gave you the opportunity to get in. I added in the dip. Some of you did, and now the stock's flying high. When we look at cyclicals, for example, lodging, hotels, cruises, that's in the red, maybe because it's a recession theme, but maybe not, who knows? We're not going to read too much into it, but we have solid indicators that we have a recession theme here, from financials, from energy, and metals, at least. We'll look at the Chinese names, they're rallying higher. We have some Evergrande, not collapsing optimism, perhaps. Communication services, blasting higher. Netflix, for some reason, popping higher. I was actually planning on shorting the name via puts, and I'm glad I waited because the name was up by over 9% today. What's up with that? They say it's password sharing in Canada. I don't know. Maybe TikTok optimism. We'll see. Then you got chips rallying, you got technology rallying. That's all expansionary. So we have a mixed signal here. And of course, when we talk about certain movers, the most notable one is the ticker ACN for Accenture. Old school name, consulting, and the name was up big by over 7%. What's up with that? Here it is. How about the tsunami of layoffs? The company announcing cutting 19,000 jobs. Now the stock is rallying higher based on the promise of laying off 19,000 jobs. So now companies can just go ahead either by laying off employees in reality or even promising that they're going to lay off employees in the future, and the stock will blast higher. So the market right now is saying, look, Fed or no Fed, who cares? Recession, no recession, who cares? For now, I want to see more and more layoffs. Feed me more and more and more layoffs, and I'm going to go higher. So perhaps when all companies get rid of all employees, zero employees, we're going to go back to all-time highs, baby. Zero employees optimism. When it comes to the daily heat map for the ETFs, once again, let's start with internationals. Chinese equities leading the pack. That's what? That's expansionary. That's not saying a recession. We have large caps leading the pack. That's actually, see, when you dig in the details, when you look at the heat map per individual names, you see Apple, Microsoft, Google, Meta, all lighting up. But when you dig down to this, you see large caps catching a bit. On the other hand, mid and small caps going down, which has been the recession theme from the get-go. So perhaps the large caps rallying higher is part of the recession theme, at least the beginning of the recession theme. We have a lot of confusion about out which part of the cycle it is. We have the so-called rush to safety in the large caps. Maybe it is a character, at least in the beginning of the recession theme. Technology rallying higher, that's part of the big caps. XLK, SMH, chips rallying higher. When it comes to healthcare, XLV down, but XBI biotech is higher due to Regeneron. Despite rates being down, real estate is also down. That's another sign that this is recessionary. Although utilities are down, so we have a mixed signal here. We'll look at gold, that's rallying. Gold miners, GDX, that's recessionary. Oil going down big, be it the XLE, XOP, OIH, that's recessionary. Financials crashing again, that's recessionary. Gas, even natural gas, UNG, BOIL, all crashing today. That's part of the recession theme too. So folks, all in all, I would say it is about 65 to 70% recession theme versus about 30 to 35 expansion theme. It's going to be sorted out in time, of course. Until then, let's do some charts, and we begin with SPY, the S&P 500, 30 minutes chart. What do we see here? Look at this. We're back at the trend line exactly. You think this is a coincidence? Of course not. So long as we keep the trend line and move higher, it's bullish. If we lose the trend line and then we lose 385, you got a confirmation that we got a reversal, at least in the SPY, and the bears are now in charge. We're going to go down, retest the lows, most likely make a new low. Here's the daily chart for the continuous contract. Believe it or not, when you look at the daily, no major damage done. We have yet another rejection from 4,037 in or around this number. We know the futures are reacting to what the SPX is reacting to, which is SPX 4,000. But the most important support here in this chart is 3,960. For now, this is intact. Will it be by the end of the week tomorrow? That is the most important question. Closing above, the bulls remain in charge. Closing below, the bears are closing in. We will look at the momentum indicators, all positive, be it the RSI or the MACD, all in the bulls camp. When we look at the Qs, 30 minutes chart, we see a rally based on a gap higher in the morning that got us all the way to the death zone of 313. Of course, Mrs. 313 was not impressed and said, you know what, go back down. Get me something new and I'll let you in. Without something new, I'm going to kill you again. Qs goes down all the way to 309, trades a little bit below that, but it makes it above it by the end of the day. That's 1 point for the bulls. The problem is they closed below the opening of the day, so that's not good. That's in the bears camp. Now, the bears are not going to start to gather more momentum until the chart goes all the way down to 300 and lose that as support. For now, the bulls remain in charge. When we look at the daily chart for the continuous contract for the Qs, what do we see? Not a lot of damage done here. Another retest at around 12,987. Actually, it is the round number of 13,000. You know the deal, but did not make it today. The question becomes, are we going to close above or below 12,766, which happens to be support for now. Closing above, bulls in charge. Closing below, bears are closing in. Not in charge yet, but closing in. And the reason is, we'll look at the momentum indicators, be it the RSI or the MACD. All positive for now, all saying the bulls remain in charge. IWM, an hourly chart, quite a different look here. The bears are in charge in this chart, and if you believe that the IWM is a leading indicator for the SPY and the Qs, you gotta be careful here, because today the Russell lost more ground and it went all the way down to the support of 168.90. Can it catch a rebound, short covering by Friday, meaning tomorrow? Sure, perhaps. This has been the theme, at least for now, short covering Friday. But if it doesn't, if it closes below this number, oh boy, we're gonna look at the weekly chart as I showed you. We're gonna see a cascading impact of selling next week. That Dixie, the dollar. We talk about short covering Friday. Guess who's down for the week? The dollar. My expectations are we're gonna bounce higher tomorrow, maybe close above 103. And if that is the case, be careful. We could see a revival of the dollar moving higher, being bad for equities. But perhaps the most important chart to watch is the weekly chart of the Dixie. For now, we have a higher low, but look at the MACD indicator. Oh boy, this is going to be a tough one. Are we going to close with a red candle or a green one? We close in the green, there is still the possibility of the dollar popping higher. But if we do close like this, or even better, make a new low, which is kind of a long shot right now, it has to be a crash, then we know for sure the dollar is about to crash, make a lower low, and that would be the beginning of the recession. A confirmation that we are indeed in the beginning of the recession. How about gold? What's going on here? Rallying high higher again, the old man, and now it caught attention from everybody. Now, all of a sudden, everybody and their mothers want to buy gold because, it's going to get to 2,000, going to get before that. You know the deal. The psychology here is get before 2,000, which I believe we will see a pullback here in gold. Look at the negative divergence in the RSI, perhaps a double top. I'm not saying it is negative. I'm saying maybe a retest to 1928, and that will give you an opportunity to get in at a better price. When we look at the 15 minutes chart for gold, we have a reversal candle followed by a bear flag, which appears to be playing out right now. But keep your eye on the dollar. If it does close negative, then you buy the dips in gold. Gold is going to give you a better opportunity to get in. But this is what Tavi Costa tweeted today. We have a gap between silver and gold. Maybe the opportunity right now is buying silver, not gold. Let gold come down a little bit and then hop in, because silver is the underperformer here. It has a lot of catching up to do. We'll look at UK oil, Brent, the daily chart. We got a rejection from 77. If we get a confirmation with another down day by the end of the week, it's over. But if oil somehow makes it and closes above 77, then here we go again. We're going to talk about maybe it was an overreaction. Maybe we should buy energy stocks. And it will be indeed a good indicator for at least a bounce in energy stocks. We look at the yield for the 2-year daily chart, violating the support line. This is a confirmation for the recession. The bond market is usually ahead of everybody, and the bond market seldom lies. The yield on the 10 daily chart did not make it above 3.5. We'll see if it's going to make it tomorrow or not. If it doesn't, keep the bond market as your leading indicator. Forget about gold, forget about even the dollar, forget about the equities market. If these continue to go down, you know it's going to be the recession theme sooner or later. TLT catching a bit today, but we're going to wait all the way till 109.5. If we close above that, we're in. And keep your eyes on the SHI, on the IEF. The TLT is not the only one. VIX 4 hours chart, what do we see here? Got a massive rebound today. 50 is probably back in. And now we got a retest at 24.29. Did not make it today, but look at the momentum. It is improving from the 4 hours perspective, which, in my bet, we will make it above 24.29 if we close the week above this number. Next week, we're going to go back to the 30s. Apple, an hourly chart, what do we see here? It got back into the wedge, couldn't make it, fell back again, so we have a confirmation, a lower low of the weakness of Apple. But the beauty is Apple has a lot of cushion. You're not going to even start to think about shorting Apple until we get below 156.24. If that doesn't hold, then maybe it flushes down through all of these soft supports like guitar strings. It will be music to the ears of bears. But at the end of the day, it's the battle of 150 once again. That will seal the deal. If the bears win again, it's over for Apple. We're a long way from that point, so we'll take it one step at a time. Tesla, the souffle, an hourly chart, what do we see here? Bad news for the bulls. They lost 194.55. Good news, you still got 187.68. If you continue to keep that, so far so good. You lose that support, the bears are in charge. They're going to close the gap, take us all the way down to 180, and then more pain to come. Last but not least, tulips, Bitcoin, what do we see here? Consolidating, waiting for more buyers. The buyers don't show up, the sellers are gonna. We have overextended conditions on the RSI, and if it pulls back tomorrow, as the dollar rebounds, we got an important indicator here. See, this is what I tweeted today. A lot of you said, what, Maverick, are you a Bitcoin bull all of a sudden? No, I'm not. I'm just telling you. Bitcoin right now is at a pivotal point, a real test. Number one, is it rallying as a risk asset based on bond yields moving down? We could find out the answer to this as soon as tomorrow. If bond yields rebound, Bitcoin goes down, while the dollar also goes down, then we know that Bitcoin is bullshit. It has been rallying as a risk asset. There's no difference between Bitcoin and RKK. Might as well buy Mama Kathy Wood. But if it is rallying based on the dollar being weaker, this means that Bitcoin is trading as a commodity, as digital gold. You know, crypto bulls, Bitcoin bulls, been arguing for a long time. You can't trust fiat. This is the digital gold. This is the replacement of the fiat currency. Well, this is the moment. Either you put up or shut up. If Bitcoin indeed is rallying based on the dollar moving down, not bond yields moving down, then maybe there is validation to the theory of bulls that Bitcoin is indeed digital gold. We'll keep an eye. The answer to this question is really important. It's not about being bull or bear. It's what is Bitcoin? If it doesn't have any utility, what are we trading Bitcoin based upon? Just because the other moron is going to pay more for it? That's stupid. But if it is rallying as a commodity, we have a lot of validation here, at least in the crypto bulls community. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have durable goods. We have the Flash PMI, that includes the manufacturing and services PMIs. We got from St. Louis, Fed President James Bullard. Now, a lot of bears are going to say, hey, Bullard will be good for bears because he's going to say maybe we should raise rates by 50 basis points. Understand that Bullard is insane. And this time around, my hunch is he's going to be insane on the bullish side. He's going to say we should cut rates, the systemic risk is too much, we should actually go by 50 basis points in rate cuts. The problem is, for Mr. Bullard and the bulls, the market might read this as, oh my God, he sees a recession coming, let's freak out. So Bullard will be important to watch tomorrow. But for now, folks, this is all I got for you. Thank you for listening, thank you for watching, and I will talk to you over the weekend. In the meantime, take care. Good night.
Call it a contribution to the parish church. And I won't take up any more of your time.